Okay, thanks everybody for attending. We'll go ahead and get started. I appreciate you giving up part of your evening. Hopefully we'll be able to provide you some insight and some good information on some opportunities that we have specifically in the Cleveland market, but there's also can be found elsewhere. And then also there's just some general tips that hopefully you can find beneficial moving forward with your real estate investment. My name is Wayne Conway. I'm with BH&R Properties, and again, I'd like to thank you for attending this evening. Like I mentioned before, and if you want to answer any questions or ask any questions, have us answers, there's a chat bar kind of on the lower left-hand corner of your screen. Just type it in. We did get a number of questions that you folks submitted ahead of time. We'll go through those during the question and answer period afterwards. But without any further ado, I want to hand it over to Sean Whalen, who is the president of BH&R Property, and we'll get started this evening.
Hello, everyone. Thanks for joining us. Can everyone hear us okay?
Go ahead. If you can't, you can either raise your hand. There's a raise your hand button, or set a chat message to us. But hopefully the audio should be working all right. Not seeing any hands raised or anything like that. So I think we're. Oh, yes, we got. Yes, looks like they can hear us okay. So thank you.
Thank you. Okay, we'll start, and then we'll go. Hopefully this shouldn't take too long, and we'll go right to the Q&A. Obviously, everyone has a lot of choices as to where to buy in today's market. There's a lot of there's a lot of great other markets besides Cleveland that offer some pretty good properties. I think what sets us apart is number one, our experience. I've been in the real estate in the Cleveland market my entire adult life, roughly about 20 years. So as an investor, a manager, and most recently as a turnkey provider for the last probably 5 years. And because of that, I have, I've been in Cleveland my whole life. I have many relationships with realtors, many probate attorneys, asset managers. So we're able to get a lot of pretty good inside deals. We get the inside track on many deals and get them at a great price, and we're able to pass those savings on to you. So it works out pretty well for both of us. I am a lifelong Clevelander, so I definitely know the Cleveland market like the back of my hand. I know where to buy, and most importantly, and this cannot be overstated, we know where not to buy. We're trying to buy in predominantly owner-occupied areas. We have a very conservative approach to our investment, and Wayne will talk about that a little further, and then I'll jump back in and tell you a little bit about the properties that we have for sale. Go ahead, Wayne. Okay,
thanks, Sean. First of all, as Sean mentioned, our approach is pretty straightforward, something that any investor could, when you're looking at a market, should kind of look at these and say, hey, learn from the mistakes that we've made. Buying in owner-occupied areas, obviously, you want to look for communities where your investment is going to hold value, where you're going to be able to easily find tenants who are interested in renting those properties. We also purchase in communities that require a point-of-sale inspection, which is important because it allows you to, allows properties to maintain value, and it also, you can protect your asset in that if you have a property and you don't have to worry about an investor buying a property next to yours, and then all of a sudden, they don't cut the grass, the property comes in disrepair. The cities and communities where we buy, because they require that point of inspection sale, any property must be maintained, and the city will find the owner. So it really helps to maintain value, and also helps to attract the tenants as well. All of our properties are completely rehabbed with all new mechanicals. Again, it's about because we do offer an in-office or in-house management company, we want to find areas that people want to live, and then we want to fix up the house where we can attract a quality tenant that pays their rent on a timely fashion, that, we don't have to, fill a house every 6 to 8 months, that we can get these long-term tenants in place. And then also, our properties generate a monthly cash flow, and we sell them at wholesale. So this provides our investors significant instant equity at closing. And essentially, that's really where it comes down to, hey, can you source a property at a discounted rate and then make it available and fix it up and find it in the area where, hey, it is an attractive area. Consequently, there is some equity built in. I did mention we do have an in-office full-service property management company. So for our investors who work with us, they realize, hey, we're behind it for the long term. It's not a matter of just, hey, sourcing a property, fixing it up, and then turning it over to the investor, because we have to spend time in managing it. We want to be in areas that we can find a tenant and not have to spend too much time managing a property. And then also we provide detailed, accurate expenses and financials up front. Essentially, we don't want our investors to have any surprises. And this, when you're looking to source properties in other markets, this is something that you should be able to ask for, look for. Hey, do you have taxes? Do you have a vacancy rate built in? Do you have, obviously the management fee? If there's utilities included, things like this. All this type of information should, a lease-up fee, is that included? So, again, just stuff to keep in mind that this information should be readily available with any, before you work with any type of company. But, hey, we're here to kind of talk about the equity and purchasing with equity. Some of this may be, pretty simple, straightforward stuff, but just to kind of review, hey, what are some advantages of purchasing a property with equity? Well, simply, your investment dollar is going to go further. It allows you to purchase in more desirable areas, again, because you're purchasing at a discounted price. And then also, obviously, if you're going to have equity built in, you're going to want to be in a neighborhood that the home values are stable, and if you're in certain parts of the city that you're buying subprime, there's not going to be a whole lot of equity available there. It also provides you a built-in exit strategy. Whether you're a long-term investor or somebody who has some funds and are looking to turn a relatively short-term investment, we actually will show a property, one of our recent deals, that essentially from the wholesale price to the retail price was the house lasted all of 3 days, and there's a $10,000 revenue generated from that, income generated from that. Buying with equity also is a hedge against loss of value. I mean, everybody feels that the market is improving. However, you never know. So if you have that built-in equity, you're always one step ahead from any potential loss. Provides you greater opportunity for accessing financing options. Obviously, if you're not, you're asking for less money, the property has additional value. There's more flexibility there, as well as may provide access to additional capital once you close on that house. And then really, most importantly, is your ability to generate a monthly cash flow return, and this, and it's the return. So you're looking at, you're purchasing an asset, you're going to gain some equity, some value there, but then as each month, the fact that you're generating cash, and that cash return may go from, without equity, a few percentages to, over 10%. Most of our properties, the average return cash on cash is between 10 and 13%. That's kind of the target where we shoot for. Next, over the last few years, a supply of bank-owned single-family homes have provided real estate investors the opportunity to purchase properties at greatly discounted prices. Probably many of you have found that. Hey, in a foreclosure, a bank-owned, that you've been able to pick up some pretty good properties at a pretty good rate. And, hey, that's, you were able to access that, and all of a sudden you've got that discounted property that you now own, that you have that equity. And in many markets, the prices have rebounded. You've probably, get back to the good old days of appreciation, and that asset is increasing in value. However, a recent article in the LA Times said as banks process through their supply of these properties, and as the housing market and prices rebound, these deals on foreclosed homes are dwindling. So, it's kind of, hey, if you were able to get in, great, although it's becoming harder and harder to source these deals. And then also there's really not going to be, good news is, overall in the economy that these mortgage delinquency rate continues to fall. So there's not that supply. We're not, refilling that steady stream of bank-owned homes. And then this was just a chart Zillow put together, and it was in the Washington Post, and essentially just kind of indicates that there are a few markets that there's still a significant amount of foreclosures that are available to be purchased below market value. So Pittsburgh being number one at about 27.4%, and then Cleveland about almost 26%. I know a number of you are from the West Coast. If you look in here, Phoenix is gone. Any kind of foreclosure value is gone. Vegas the same. Sacramento is less than 1%. Riverside less than 2%. San Diego less than 2.5%. Los Angeles about 4%. So essentially, hey, those opportunities in most of the markets have dried up, and there are just essentially just a handful of markets left that you still have this supply of bank-owned properties. So when you're looking at it, which markets provide the best investment opportunities? Well, it depends on a number of conditions. Supply. We mentioned, hey, can you purchase a discounted single-family home? Is it affordable? Do home prices provide the investor the opportunity to generate monthly cash flow? Is it stable? Both the market as a whole as well as the neighborhood. Have the home prices completely rebounded? Are you counting on appreciation as your sole source for payoff on that investment? And then ask yourself, hey, where are these properties located? Again, it's down to, hey, is there value in the communities where you're buying? And then demand, competition by the investors. Many of you as investors, you probably run into a deal or two that you were, thought would be a great opportunity to buy, but maybe another investor came in, swooped it out in front of you. Because we purchase in certain areas that require point-of-sale inspections, the city essentially tells us, hey, yes, there's this house for sale, but there may be $20,000, $30,000, $40,000 worth of repairs that need to be done, and that requires us to put that money in escrow. So essentially that's tying up, more capital. So a lot of times, because of the areas we're buying, we face slightly less competition, or the competition that we do run into, I mean, they're pretty well funded. So it's not that mom and pop investor, and so that's kind of one of the barriers that we like to have. We take advantage of here in Cleveland. And then essentially, hey, rental demand. What type of tenants can you find? I mean, it's one thing to source it, but hey, you've got that. Whether you've got that note to pay or whether it's you want that, you've got those funds tied up, and you're looking for some sort of cash return, that's what you have to consider. So, purchasing income properties with equity, well, investors can purchase foreclosed populars below market in a few markets. We talked about the Cleveland and Pittsburgh were namely both over 25%. So, looking at that as the only criteria, it's not a wise choice. Really, you've got to ask yourself these questions like you would on any other real estate decision that you're about to make. What is the cost to completely rehab the property? Do you factor that in? Is the property located in a desirable area? How easily can that property be rented? Hey, you may find the best deal on a property, and all of a sudden, if you're, it takes you a couple, 2-3 months at a time to find a good tenant. Those any kind of cash return quickly is dried up. Will the neighborhood detract from future value? Again, that goes back to hey, is there some sort of point of sale, or can you count on that neighborhood to maintain its value? Hey, it may look great, during the day when you're taking a tour, but if you go at night, is it a whole different story? Do you drive around the neighborhoods and see windows boarded up, lawns that aren't cut, things like that? You got to really kind of take a look at it and say, hey, is this the area where I'm buying? Is it truly, is it a good area? Is it a good area both on a can I find a rental standpoint, but as on a future value standpoint? Does the price-to-rent ratio provide a good annual cash return? And then if you're looking outside your area, and most, I know a lot of you folks from your zip codes were calling in from California. Who's going to manage this property? If you're out of market, you've got to find a real estate manager, property manager, and hey, do they know what they're doing? Do they ultimately have your best interest at heart? And then, ultimately the litmus test is who'd want to buy the property. You got to look at it. Hey, you want to hold on to that investment, but you're always kind of looking at it as what's my exit strategy, and can you honestly answer, hey, there should be a lot of people interested in buying the property. That's really where you want to be, and that's kind of where we kind of look at it because it's mostly in owner-occupied areas where that are investing in their schools, building new buildings. They're in suburban areas that a lot of our tenants then eventually purchase in the area. So that's really kind of a good way to say, hey, is this a good investment for me? I mentioned Cleveland market conditions. Just to give you an overview of really why we're excited. That we're in the market that we're in. One, it's affordable. The area's median home price is $109,000, a little under $110,000. However, most of our majority is kind of in that $55,000 to $70,000 range. And again, we're not buying, out in the way out in the suburbs where home prices are very expensive. We're looking at owner-occupied areas, very very much working class, blue collar neighborhoods with good schools, owner-occupied areas. That again, when you're investing $55,000 to $70,000, we're building in anywhere between 15% and 45% equity when you purchase that property. And we've got a number of properties that we just kind of want to show you, hey, where do we have it priced, and what are some comps in that area to demonstrate, hey, you know what, this is available, this can be done. Additionally, the supply, as we mentioned, I don't want to be a dead horse, but hey, we're still one of the markets where we do have a significant supply of single-family bank-owned properties. Our asset managers are saying there's anywhere between a year to 2 to 3 years left of inventory left in there. So they're kind of slowly releasing it out because of that relationship that Sean's built up over the years. We're real excited to be able to be one of the first ones to kind of get first dibs on many of these properties. The demand, in certain communities, the point-of-sale inspection, which require investors to place significant amount of money in escrow. Again, I mentioned that previously. This kind of protects the investor, but also essentially protects us in the areas we like to buy because we know those are stable areas. It's going to maintain value. It's also going to keep some of our competition at bay. And then rental demand. Cleveland offers the best price-to-rent ratio in the nation, and rental demand is at an all-time high. This isn't in the city. We're not buying in the city of Cleveland. We're buying in the suburbs where, the cost of living is well below average. Our unemployment rate is actually lower than the nation. And truly a lot of that is focused. People think of Cleveland, you think of the steel mills, the automobile industry. Well, our economy is based on healthcare. So, the Cleveland Clinic is one of the largest employers. We have over 27 universities and colleges within Northeast Ohio. So we really have a progressive economy, and so there's a lot of people who maybe in the foreclosure crisis has lost their homes, but are still in demand of they have good jobs, and they're nurses, they're technicians in the hospital, they need housing, and they're looking for good quality single family properties in areas that they can send their kids to school, their kids can get a good education that way. And then also, according to CoreLogic, we have the second highest single-family cap rate in the nation at 12.3%. So this was in spring of this year. So we're very excited about being in the market that we are, and we're real happy to share this with as many folks as we can. And then just kind of in summary, and then I'm going to turn it over to Sean to go through some of the details. by leveraging our experience and relationship with asset managers, with the real estate professionals and probate attorneys, we're able to find and secure the best opportunities in select neighborhoods. So again, our approach is each of our properties are completely rehabbed, all new mechanicals, and then we make them available to investors at wholesale prices. So again, that's kind of our hallmark. We're not in it to get maximum dollar. We want to sell to investors. Sean's been able to grow this company really organically. Really has not done any marketing. He's essentially found a purchaser, an investor is bought a property from Sean, and then a year later comes back, buys that second property, then refers somebody that he knows. So really to be able to kind of work with our investors, they become friends, and they refer their friends in, and we've been able to grow our business that way. We're real excited about that. So I'm going to turn it over to Sean. He's going to review a few properties that are very indicative of the type of properties that we invest in and type of deals that can be put together for you. So, I'm going to turn it over to Sean.
Thank you, Wayne. And as Wayne mentioned, I think it's really important to just reiterate that we are, purchasing in these owner-occupied areas that have the point of sale, because it does. We have a list of repairs that we have to do per the city, and we do not get our funds back until they sign off on those repairs. And often the case, we do go above and beyond those repairs, but it definitely sets a precedent for the neighborhood and keeps property values up. So it's really important. One thing that I'm really focused on when I rehab a house is not just putting paint and carpet down. I think it's really important to replace mechanicals new. Every home that we sell has a new furnace, new hot water tank, updated electrical, plumbing, roof if necessary. So they are completely rehab. One thing from a management perspective that we don't want the calls at 3 o'clock in the morning that there's no heat and the furnace went out. So those are all brand new, and they do come with a manufacturer's warranty of 5 years on the furnaces and 3 years on the hot water tank. The first home we have is 20591 Wilmore. I had a tour last week, and actually this just went under contract, and it was one of my past investors. This is her third home that she's purchasing with me. And this home in particular we sold for $58,000. As you can see, the comparables that we chose, these are all recent sales within the last year, similar in size, and again, similar in condition. They're also rehab with new mechanical, siding, etc. So they're all from the same neighborhood, all recent sales, similar square footage. So when you're purchasing, you're purchasing with us, you're purchasing a fully rehabbed house and one with equity as well. The second house we have, which is available, it's 20671 Goler. That's actually a 4-bedroom, one and a half bath in the city of Euclid, priced at $56,000. Again, it has a brand new roof, furnace, hot water tank, all new paint, electrical, plumbing, and flooring, and we actually added a 4th bedroom on the second floor. Again, plenty of equity. As you can see, we have comparables in the exact same neighborhood, similar square footage, location, of course, that sold for much more than our purchase price.
And we're basing this percentage of equity actually off of the lowest price sale. So there was a property here just a couple doors down. It was only a 3-bedroom, 1-bath at $63,000. So to compare apples with apples, this is a conservative number. We're not automatically looking to the highest point of highest sale and then doing the math from there.
Yeah, it just kind of shows you the neighborhood. What's taking place in the neighborhood. We have a home that sold for over $100,000. That's the kind of neighborhoods we're investing in. We have another home, 4041 Suffolk, and this is in South Euclid. It's a 3-bedroom, 1.5 bath with a finished basement. Again, it has a new furnace, hot water tank, plumbing, electrical, flooring. And we had a sale directly across the street. It's actually the only sale that took place in the last year on Suffolk. So, in these neighborhoods, you're not going to drive down the street and see 20 for sale signs. For the most part, they're fairly non-existent. But the one across the street sold for $121,000. It is larger by our subject, but not by that much. Probably, a couple hundred square foot. So that's indicative of the kind of value you get with BH&R properties. This is a beautiful house. This is 327 East 24th Street in Euclid. This is a 4-bedroom, 1.5-bath home. We have it priced at $65,000. Again, it has a new roof, electrical, furnace, hot water tank, all new mechanicals. It's absolutely beautiful street in Euclid. Again, plenty of equity on this street. It's one of the best streets in Euclid, as shown by the comparables. They go from 95 all the way up to 115,000. They're all very close in proximity. And again, this is all public information as well. So we can, direct you to the county auditor's site. You can see for them, yourself that these are all recent sales, similar square footage. 1122 Winston. This is actually under contract. This is a 3-bedroom, 1.5-bath home, which we have priced at $66,000. Again, all new mechanicals. We have 3 sales on the exact same street that sold within the last year. Actually, most of these sold within the last 3 months. The lowest being at $84,500. They're a bit different in that they have granite counters and stainless steel appliances. Other than that, as far as the rehab, they're very similar to our home in that they have new mechanicals. Again, this is a pretty good example of one that, again, is under contract. 31 Layton, 5-bedroom, 3-bath home, all new mechanicals. We had it listed for wholesale at $85,000. I decided to put it on the market, meaning the MLS, the multiple listing service, which goes out to market buyers. And we priced it $10,000 higher, and it went under contract in 3 days. I actually priced that one too low. I should have priced it higher. Typically, when they sell that fast, you didn't price it correctly. My mistake, but that just shows you a bit of instant equity, and this is true equity. Within 3 days, it's sold for $10,000 more. So that's a pretty good example of the homes that we do have. We welcome your questions. I'm sure you have a lot of them, and hopefully you can answer them. Thank you.
Okay. Well, we had some questions here that you guys typed in ahead of time, and the first was, how would you compare one building to another when evaluating a purchase besides just price and cap rate, et cetera?
Well, I think knowing our market, I base everything off location. You hear it all the time, location, 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 but that is extremely important. The suburbs that we purchased in are for the most part, very, very similar. So as far as individual house, what sets one apart from another, I try to buy, we have a few that are located right next to a park. Obviously, that's an intangible, that we look for. But for the most part, I would not buy a house in this market that needed substantial structural work. Maybe 7 years ago we would, but there's enough in the market now that we try to stay away from anything that needs significant structural work.
Okay, I had a question here from these foreclosed properties. Are they purchased directly from the MLS?
For the most part, they are. Although I buy a lot of probate as well. Before the market crashed, I would advertise on TV that we buy houses. And because of that, I got a lot of pretty good relationships with probate attorneys. So we buy a lot of estate sales, but for the most part, most of our, I'd say 95% of the homes are directly from bank-owned properties.
And then here's a good one. If you had $1 million, would you buy one crown jewel or many smaller gems?
I think it's pretty good to diversify. So if you only had $1 million, I think I would buy many smaller gems.
What if you only had $20,000?
You'd buy one house, and that you'd get finance, and that's your down payment.
You can.
You could buy a house in the inner city for $20,000 and have it sit vacant for 12 months and get vandalized.
Right. Yeah. You need a loss. on your taxes. Another question. What did you say the average DOM for these properties are?
For a rental, we usually have them rented within, definitely within 30 days when we're finished. Often the case, as we're rehabbing a house, we'll put the sign out. The guys are working on it, and we'll have people walk through. And often the case is we have it rented even before they're finished.
Okay. And then also, when you sell ARV?
Mm-hmm. After repair value?
Yeah.
Yes.
Yep. Okay. That was a question. How do you, this person looks like a newer investor, how do you find deals? How do you accurately analyze and arrange funding for these deals? I mean, I answered that question previously, but.
Yeah, we, again, we source deals through many avenues, but for the most part, especially in this economic climate, everything we purchase is distressed in some fashion, but we purchase, again, mostly bank-owned properties. As far as analyzing a property, I've been doing it for 20 years, so I can basically look at a house, walk through it in a short period of time, and pinpoint what it needs. And again, I know the market, so that's really, as far as analyzing a property, knowing the market is the most important thing.
Yeah.
And that goes for any market. I mean, whether you're buying in Cleveland or not, as Wayne mentioned before, it's so important. If you're iffy on a market, try to maybe drive around at night. Gives you a pretty good indication what type of neighborhood it is.
And really, I mean, you've been doing this for over 20 years, Sean. And you and I talked a lot, and essentially of all the mistakes that you've made, and essentially you've got it down to, hey, it's about 4, 5, 6 areas where you're concentrating the purchases on, and so it's like, hey, we know what markets to kind of look at and go at it that way, and that just comes with, hey, making the mistakes and finding the good areas to buy. Let's see, what is the unemployment rate? It was just announced yesterday that in Ohio, our unemployment rate was 6.9%. So we're actually down from September. And then finally, the last question so far here, don't you need a bank appraisal in order to determine if a house has built-in equity?
No, you actually don't. You go off recent sales in the neighborhood. And that's indicative of market value. Of course, you want to compare apples to apples. It's not fair to compare, one of our renovated houses to a bank-owned property in the same neighborhood. They're not in a similar condition. That bank-owned property might need $40,000 worth of work, whereas ours is already rehabbed. So we're trying to find sales that also have new mechanicals that are, located in the exact same neighborhood within 0.5 miles. So no, you don't need a licensed appraiser per se to appraise, to quote equity.
Okay, I got another question here. What's the population of the city you invest in?
Well, it differs because we choose about 6 different cities. We don't buy in Cleveland proper, which is shy of 400,000. Matter of fact, I live in a suburb. I'm one bridge over from, Cleveland proper, and I'm not part of, the 400,000. But typically, probably the cities that we purchase in, you're looking about, 60,000 to 100,000. But and again, we purchase in 6 different cities that we deemed, worthy to invest in. But it's about 60 to 100,000.
What is the average household income in the areas that you invest in?
And again, that varies. I just had a house in Cleveland Heights. It wasn't on our presentation, but it's priced at $89,000. It has, a custom-made fireplace, granite counters, the bathrooms all marble with a jacuzzi tub, and we had that. Again, it's priced at $89,000, rented for $1,200 a month to 2 professors that are making, $200,000 a year plus. But I'd say the average income, 2-family income, is probably around $70,000. But that's pretty indicative. You figure the rents are anywhere from $850 to $1,200. So.
All right, very good. All right, thanks. If that was all the questions, I appreciate that. We have, like I said, I'll be sending everybody an email with a link to this as well as our contact information. It looks like, we got one more question. So we just made it, here we have, what's the average turnaround for rehab? I mean that varies. I mean, in some of the homes that we purchased, there's, the point of sale inspection and the amount of rehab is relatively minimum, 2-3 weeks versus you've had some that really depends.
Yeah, you're looking about 30 days on average. It's kind of hard to rehab something under 30 days. By the time you have it inspected by the city, it takes just coordinating that with the city and the different, because you have to have each mechanical inspected separately by 3 different inspectors. So you're looking about 30 days.
All right, very good. All right, well, hey, I appreciate all the great questions ahead of time and as well as during the presentation, and I appreciate everybody taking their time to, hopefully this was beneficial. Like I said, we'll be following up with each of you, and we'll hope to talk to you soon. If not...
Yeah, and also, not to cut Wayne off, but if anybody has any questions, even if you don't buy in Cleveland, if you have questions when you're purchasing, or you think, maybe you talk to a property provider and, there's red flags, feel free to call us. And we won't not bash another provider, but we will kind of walk you through and so you know what to look for. Because I think it's important to even diversify. You don't want to have all your eggs in one basket and buy 10 properties in Cleveland. You kind of want to diversify and buy in other markets. And that being said, I think it's really important to ask the right questions. And you're not sure if you got the right answer, you can ask us.
Yeah, and we can send you, a list of the financials so hey, what expenses, should be included in any kind of revenue or expense projection. So we'll be happy to share that. That's, at least what we can do. So again, appreciate everybody's time. Hopefully we'll talk to you soon. A little timeliness here. Hope everybody has a great Thanksgiving, and again, have a great night. Thank you.
Thank you.
Thank you. Please stand by.